Hey there, if you're running a small business, you know that managing your money can sometimes feel like a real roller coaster, right? One month you're flying high, the next you're trying to navigate a dip. So today we're going to break down a super powerful financial tool that can help smooth out that ride, the business line of credit. Let's dig into how it can give your business the stability it really needs. So let's think about a real world situation. Imagine you're a retailer. We'll call her Priya. The busiest sales season of the whole year is just around the corner, and a supplier offers her an amazing deal on some new inventory. The catch: Priya's cash is all tied up, She's waiting for customers to pay their invoices. What's her backup plan? Honestly, that's a question every single business owner needs to ask. For Priya and for you, a line of credit is that backup plan. The easiest way to think about it, it's like a pre-approved financial safety net. It's a reserve of money that a bank has already set aside for your business, just sitting there, ready for you to use whenever you need it. Whether it's for a great opportunity like Priya's or for some unexpected emergency.
All right, so how does this safety net actually work? Well, it's actually incredibly simple. A bank approves a specific maximum amount for your business, and that's called your credit limit. Now, this isn't a loan that you get all at once. Think of it more like a fund that's just standing by, ready for you to draw from as needed when you need it.
Let's put a real number on it for our retailer, Priya. Let's say the bank approves her business for a line of credit with a limit of 1 lakh rupees. This entire amount is now available to her. She gets a peace of mind knowing it's there, but here's the key. She's in total control of when and how much of it she actually uses. And this right here is the magic of its flexibility. Priya doesn't need the full 1 lakh to get that new seasonal stock. She just needs a part of it for the down payment. So unlike a traditional loan, she doesn't have to take the whole lump sum. She can pull out the exact amount she needs, which keeps her debt totally manageable and her costs way down. Okay, now let's get into what might just be the most powerful feature of a line of credit: how you actually pay for it. This is where the real cost-saving benefits shine through. And believe me, it's a total game changer for managing your cash flow. So let's stick with Priya's 1 lakh rupee limit. Out of that, she decides to draw just 10,000 rupees to pay that supplier deposit and lock in that amazing deal on her new inventory. She's only used a tiny fraction of her available credit. So, what does that actually mean for her costs? Now, check this out. This is where it gets really interesting. While Priya's total approved limit is a full 1 lakh, she only pays interest on the 10,000 rupees she actually borrowed. I mean, that is a massive difference. She has access to the full amount, but she's only getting charged for the small piece she's actively using. So yeah, the takeaway here is huge. You get all the financial peace of mind without the heavy burden of paying unnecessary interest. Because you're only charged for the money you're actually using, a line of credit becomes an incredibly cost-effective way to handle those cash flow gaps and jump on big opportunities. But wait, the benefits don't even stop there. A line of credit isn't just a one-time thing. It's what we call revolving credit. The best way to think of it is like a financial resource that refills itself, ready for you to use again and again. Let's see how that cycle works for Priya. It's a really simple 3-step process. First, Priya uses the funds she needs, her 10,000 rupees. Second, after a fantastic sales season, she uses her profits to pay back that amount. And the moment she repays it, boom, her credit limit is fully restored, right back to the original 1 lakh rupees. And this just perfectly shows that revolving feature in action. Before she pays it back, she still has 90,000 rupees available to her. But the second she repays that 10,000, poof, her full 1 lakh rupee safety net is right back in place, ready for the next time she needs to buy inventory or, cover an unexpected bill. So let's pull all of this together. What's the big takeaway for you as a business owner? Well, it's about much more than just having a backup plan. It's about gaining a real, proactive control over your business's financial health. If you only remember one thing from our chat today, please let it be this. It just perfectly sums up the power of a line of credit. It's about having access to money without the obligation to use it and only paying for what your business truly needs exactly when it needs it. All right, let's do a quick recap. A line of credit gives you a flexible safety net, you save a ton of money on interest, and it's a reusable tool that recharges every time you make a repayment. And most importantly, it puts you in control. Here's a little pro tip. Try to review your usage every month just to make sure it lines up with your cash flow goals. That'll keep you firmly in the driver's seat. So I'll leave you with this final thought. We saw how a line of credit helped Priya not just survive, but actually thrive by grabbing an opportunity. Now, think about your own business. How could having this kind of flexible financial tool ready to go help you not just solve problems, but actually accelerate your growth? Thanks so much for joining me today.